If you're shopping or looking into DSCR loans, these are 10 must-ask questions for the DSCR lender or broker that you're working with just to ensure that you get a good rate and that you're put into the right DSCR loan product. You want to ask the person that's quoting you the rate what they're using for the DSCR to quote. So most lenders, want a 0.75 or better to be able to qualify. And then obviously the rates get better and the terms get better as the ratio gets higher. So the ratio is dependent on what the actual rents coming in are compared to the housing payment. So for example, if you're receiving $1,500 in rents per month and the housing payment is $1,000, that would be 1.5 ratio. Okay, because you're getting 1.5 times what the housing payment is. So if I'm quoting you at 1.5, okay, and another lender's quoting you at 1-to-1, well, obviously my rate's going to sound better. But if your property is not going to be a 1.5 ratio, then what I'm actually quoting you isn't actually a true rate that you're going to actually get. So one, you want to make sure that they're quoting you the right rate. And two, you want to make sure if you're shopping different lenders or brokers that you're comparing true apples to apples. So make sure that you ask them what ratio they're using. What credit score that they're utilizing is important as well. So make sure that you ask that. Now, the score that the lender will eventually use if you move forward with the loan, in most cases, is going to be the middle score of the lower borrower. So it's TransUnion, Equifax, and Experian, and then they use the middle score of the three. And then if there's two borrowers, they're going to use the middle score of the lower person in most cases. Now, some lenders with DSCR, because they're not under the same guidelines as a conventional loan, will use the higher score of the highest borrower, the middle score of the highest borrower. So just make sure that you ask and know that. And then depending on what score they're actually utilizing, you're going to fall into different buckets. Now, not all lenders have the exact same credit buckets, but for example, everybody that has a score between 660 and 679 is going to get the same loan adjustment to the rate all together. Okay, then 680 to 699, 700 to 719. So if we're not utilizing the same credit, one lender's using 720 and one lender's using 715, well, the lender that's using 720 is going to be able to quote you potentially a slightly better rate, but that's only because they're quoting you with a higher score. Now, if you've never done a DSCR loan, you do not want to get surprised by the fact that they can have prepayment penalties. So you want to make sure that you're asking what prepayment penalty comes with this rate, because prepayment penalties typically can be anywhere from a no prepayment up to 5 years. And generally, opting for a higher or longer prepayment penalty will lead to a lower interest rate from the lender or lower fees for that rate. Okay, and pre-penalties are going to occur if you sell the property, refinance it, or even sometimes pay the loan below a certain loan balance with some lenders. So you want to ask all the terms of the prepayment. Now, the most common structure for DSCR loans is called a step down. This is typically represented by 5, 4, 3, 2, 1 or 3, 2, 1. So if it's a 5-year prepayment penalty, if you pay the loan off in the first year, you're going to get hit with a 5% penalty of the remaining loan balance. Second year, 4%, third year, 3%. If it's a 3-year prepayment penalty, then the first year, if you pay it off, it's going to be a 3% penalty, second year, 2%, and the last year, 1%. If it's a fixed fee percentage and it's 5-5-5, that means no matter what year you pay it off during the 3-year period, you're hit with a 5% penalty of the remaining loan balance. Okay, so make sure that you understand, one, what prepayment penalty that you're getting, and number two, that's going to affect the rate. So you want to make sure both lenders or brokers are quoting you the same way so you can truly compare apples to apples. Now, when you're getting quotes over the phone, they might tell you that, it's 7% with 1 point in cost, but they're not talking about the underwriting, processing, and origination fee. And so those can be more lender to lender. So you want to make sure that you're calculating everything that's going to be in Section A of the loan estimate. So the loan estimate is something that we have to disclose once we actually take your application to, and on page 2, it's going to show you the loan costs. And Section A is really where lenders are going to vary on their fees and the costs for the rate. Okay, so you want to make sure that you're getting as much information up front so you can make the best decision for you and which lender to move forward with. So always ask and break down underwriting, processing, and origination. Also, you want to ask if they're charging you any discount points for the rate. And discount points are essentially mortgage interest that you're prepaying up front at closing. Typically, 1 point in cost of the total mortgage permanently lowers the interest rate anywhere from 0.125 to a quarter, depending on the type of mortgage. So you want to make sure that if they're telling you that the loan rate is 7.5% on a 30-year fixed, is that a rate that costs no discount points? Are they charging you 2,000, 3,000, 7,000? You want to make sure that you ask that because two lenders might be saying 7%, but one might be charging no discount points and the other lender might be charging, 2% of the loan amount of a $300,000 loan. 2% would be $6,000 in total discount points. If you're unfamiliar with discount points, you'll want to watch my other video on what are discount points, how are they calculated, and are they worth purchasing? Now, the sixth question you want to ask is what is the total fees in Section A of the loan estimate? Now, I know we already asked what the processing, underwriting, and origination fee is. Okay, we're going to ask what the discount points are. And then I'm going to ask what all the total fees in Section A are, because again, there might be other junk fees that this lender has that perhaps other lenders don't. So you want to ask that and then add up what they originally told you for the discount points, the processing, the origination, and the underwriting, and is it equaling out to what they're telling you is going to be in Section A? If it isn't, then you need to say, well, what are these other fees going to be that you're charging me? Because you told me, underwriting was 1,500, processing was 500, origination was 0, the discount points were 500. I'm adding this up and I see another $500 in fees. Where is that coming from? So you just want to make sure that you ask it in multiple ways, but also make sure that you're not going to get any additional junk fees added into your loan. It's very important that you know when you can lock the rate. Okay, your rate can change if you don't have it locked, or the cost for the rate that I quoted you can change depending on the market. If something happens over, let's say, a 20-day period, there's a Fed announcement that interest rates went up again, inflation is going up, all those different things that can affect the rate. Rates do move like the stock market. It's not so volatile, but they do move. So you want to make sure, one, is the loan locked? If not, when can you lock it? So with some DSCR lenders, I can lock it up front. Once I have an application and a credit, I can lock the loan. Other lenders require the initial approval to be done, and some lenders require for an appraisal to come back. Okay, well, an appraisal might take 10, 12 days. So you have to weigh the risk of potentially what might happen during that period. Now, DSCR loans rates don't move as typical as a conventional loan just because these are non-QM or non-qualified mortgages, so they're not affected in the same way. However, they will sometimes move. So you want to lock in when you can. That way you can basically hedge against rates going up. You want to make sure you ask the lender, will they do a rapid rescore if you can get a better rate? Earlier, we talked about credit buckets, and we said that everybody from 700 to 719 fall into the same bucket, and then 720 to 739. So in this example that you're looking at right here, you can see that the middle score is 708, but then below all three scores is plus 40, plus 32, plus 16. Now remember, they're going to use the middle score. Okay, so the middle score is the Equifax score of 708. If I were to add 16 points to that score, I could get you above 720. Now you're into a new credit bucket, which could potentially get you a slightly better rate. Now, what I would need to do is click on that button that says Wayfinder, and it gives me directions that I can give to you, the borrower, on how you can earn those additional 16 points. And it's much different than you just doing something on your own and waiting for the credit bureaus to then update your score. This is what's called a rapid rescore. Okay, so let's just say that you pay a credit card down from 400 to 0. You get me documentation that the card is now 0. We submit that. Okay, so it says request rescore express. What I do is I submit that, and usually within 2 to 4 business days, they will then show and reflect the zero balance and then raise that score up. Now, when I click the wayfinder, it's going to tell me by percentage the likelihood that I can get you over 720. Okay, it might be at 80%, it might be at 98%. Okay, it may work, it may not. But the reason that some lenders don't do it is they cannot charge the borrower for a rapid rescore, and it does cost money. So a lot of brokers and lenders don't offer it because if you potentially, the loan doesn't ever fund, it doesn't go through for whatever reason, they're out that additional cash. So you want to know if they'll do it. That way, if your score can get raised, let's say 680 over 700, that's going to make a huge difference. Popular with DSCR loans to close them in an LLC, but some lenders do basically have a cost for closing the loan in the LLC. Now, it's not a cost like a line item that you're seeing on the paperwork that you're actually paying for. It's a cost that's built into the rate itself. So perhaps it's like a half point hit to the rate or a quarter point hit, or maybe it's, a quarter point to the discount of the actual loan amount. So you want to ask if it matters if you close into an LLC. Many DSCR lenders don't affect the rate or the cost if there's an LLC, but some do. So you just want to be able to make sure you're knowing if you're going to pay additional and if they're quoting it based on you closing in an LLC, if that's your goal at the end of the day. Make sure that they're using the correct loan to value as well when they're quoting you the rate. So the loan to value just means the actual property value, let's say, is 200,000, okay, and the home is worth 150,000. That means we're at 75% loan to value. Okay, so the lower the loan to value, the less risk to the lender, which means better rate and term for you. So if one lender is quoting it at 73% loan to value and the other lender is quoting it at 69.999 or something like that, they're going to be able to quote you a slightly better rate in most cases. So you want to truly make sure that you're comparing apples to apples. And this is also a good way to figure out what the loan balance is going to be and make sure that they have all the numbers dialed in the way that you have them on your end, so you can really see if this is a good idea to be able to maybe take cash out of your investment property or if it's a property that you should be investing into. Now, some other tips and questions that I would ask. First of all, make sure you're getting rate quotes on the same day or as close to the same day as possible and the same time. If you get a rate quote from me in the morning time, and then let's just say that stocks go wild today and the 10-year treasury moves a lot, maybe there's the actual Fed announcement that's saying if inflation went up or went down, and then you call me in the afternoon, well, rates can actually move throughout the day. So potentially what somebody tells you in the morning could be worse or better than what somebody's telling you in the afternoon. Now, typically it doesn't move that much, but once you get down to like choosing the few people that you may want to work with, what I suggest is trying to get those quotes as quickly and as close together as possible. Other things is you want to make sure if you're renting it as a short-term rental that they're quoting for that. Okay, again, it's not a line item that you're going to see in closing costs. However, it does sometimes affect the actual rate. Okay, they're called loan level adjustments, and I have other training videos about those if you want to learn more and get way more in depth on how lenders actually calculate what rate you qualify for. But you want to make sure that you tell them this up front, especially if you're a first-time investor, because some lenders don't work with first-time investors on short-term rentals. So you don't want to come to the point where you're paying for inspections and appraisals, then they find this out, and then all of a sudden the deal is falling apart. So be upfront about your purpose and how you plan on renting it. If you're doing a cash out on one of your properties, ask how much cash in hand you're going to be receiving at closing. That way you can kind of tell what the closing costs are that the lender is going to be applying to the loan, because you're going to be able to know, okay, I'm receiving this much back. However, my loan amount is this. We're $25,000 off. We're $15,000 off. What are all those costs? So then you can go back and ask the lender. Now, obviously, if you have a loan estimate, it'll all be itemized there for you. However, if they're just quoting you over the phone, that's a key question to ask. Now, if you've watched some of my other training videos, you know that there's a lot of DSCR lenders out there, and they're not all created equal, and they don't all have the same products or guidelines. So really what I would suggest is working with a broker that you can build a relationship with and trust with, so that they can make sure that they're finding the best product that fits what your goal is, whether it's long-term rents or short-term rents, whether your plan is to potentially have an exit strategy in 3 to 5 years for those prepayment penalties, but also so that they can do the pricing for you. There's obviously so many lenders out there, you could be shopping for the best rate all day, and all of a sudden it's the next day and you're always chasing the best rate, versus a broker can price all these lenders at once and be able to see who's at the top currently based on your specific scenario. Now, to be able to kind of narrow it down, what I would suggest doing is doing a quick Google search on the broker or lender, check reviews, make sure that there's other people that have worked with them that are willing to vouch that, yes, they closed my loan, they did a great job, okay? That way you can avoid some of the lenders that maybe quote really good rates, but they don't actually close on loans. Okay, so that's what you want to avoid, is the headaches, the stress of potentially trying to chase the best rate, but it may not be the best program or fit for you, or you may not qualify for it. So a broker's never going to say no to a loan, because at the end of the day, that's how they make money and that's how they get paid. But perhaps mostly they do is conventional VA FHA loans. You're going out there, you're buying an investment property, you go to them because they're a friend, or you were referred to them because they've done a loan for somebody that they know, but they haven't specialized in DSCR loans before. If they don't do a lot of DSCR loans, there's pitfalls that you can fall into if you don't know the ins and outs of all the programs. So you want to make sure that you're checking in, one, on if they have reviews, and two, have they done non-QM specialized DSCR loans? Now, I do a lot of non-QM loans. These are my client reviews. You can Google me, you can do all of your research, and this is what I suggest you do for other brokers. I'm not saying just because somebody doesn't have reviews that they won't do a great job for you, because there was a point in my career where I was doing my first loan. However, I would suggest doing some review search, and then if you are working with somebody that doesn't have any, maybe they have a boss or they work for a broker that has a lot of reviews, and maybe they're going to hold their hand through the actual loan file. Just make sure that you're talking to a person that understands what they're doing with the loan, so that you won't get caught up in a situation where perhaps the property doesn't fit that DSCR lender's requirements. Now, if you have questions about DSCR loans or scenarios, how to be able to calculate the DSCR, anything like that, or any mortgage needs at all, you can email me at trevor@harborfunding.group. You can give me a call on my cell or text me at 619-404-6637. Or on the bottom right, there is a QR code. It'll pull up my calendar. You can schedule an appointment with me. We'll go through all of your options, and obviously I'll answer any questions that you have. Hopefully we'll work with you soon on your next investment property, and thank you for your time in watching this video.